Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody, guys. Today we are returning back to discussion of the euro currency. Well, currently, guys, we do not have probably very clear setups for trading, for immediate trading on the euro currency, particularly on the daily chart. On the intraday charts, probably some patterns could be traded, but the major object for a current update is to prepare some short-term expectation, short-term analysis, and for forecast, if we could call it in this manner, for possible action on the euro currency till the non-farm payrolls rule is within the nearest sessions. So as you can see, market has broken down our long-term consolidation that we have discussed, and we said as soon as market will do this, that will be the first step in the direction of the parity action. But the breakout is only the first step. The second step, it will be the protection, let's call it no return back inside of this broken consolidation. In other words speaking, euro should show not only the breakout out from this area, but it also should not return back inside of this area. So if this will happen, market return back inside of the flag, especially if it will move above the 1130 area, that could become the sign of the failure breakout, and this could lead to the further upward action. That's why currently we should monitor the action of the euro currency around this lower border of this big flag pattern on the monthly chart to get the clear confirmation of the breakout. So shortly speaking, our major task right now is to get the clarity and the final confirmation that this breakout was real, and we could safely think about the possible taking of the short position of the euro currency. We need the last confirmation. From the technical point of view, guys, here we have the stretch pattern. This is the bullish stretch, because take a look, market has hit the daily oversold right at the fib level 109.40 area, and that gives the bullish Jordan stretch patterns that suggest upward action. Since minor retracement already has started, this by the way has happened on the hawkish comments from the Fed last week, this drop. The first small step up has happened already, but probably this will be insufficient, and we expect a compounding retracement, something of the ABCD pattern to the upside, because market is really at oversold, and usually when market hits the oversold, the upward retracement is greater, because oversold additionally pushes market higher. In other circumstances, market could show, for example, minor retracement, but as soon as it has hit the oversold, retracement usually greater to the upside. That's why we think that this is not the limit of this upward action. We probably will see something of the ABCD pattern. Now is a very important moment, the major nuance right now on this market that we see on the 4-hour time frame chart. Just keep in mind these levels, approximately 1130. So lower border of this big channel to the upside, and we will need it on the lower time frame charts. Now let's take a look at the 4-hour time frame chart. On the 4-hour time frame chart, we have the major picture, guys. So first of all, we've got the Garter's triple to sell pattern, so initial thrust, ABCD retracement, and extension. And now mostly this extension has been completed, so we have mostly also large A, B, C, top, D pattern has been completed on the daily chart right around the fib level. That also creates the agreement support. So this is really strong support area, guys, and market is oversold at this support area. That's why we expect the upward bounce. At the same time, right around 1130 area stands very strong resistance. Why this level is important? Because this will be take a look. Red line is the weekly pivot resistance one. Gold line is the November pivot point that has been tested yet. So that's why it's additional reason why we think that market will not stop here and will show another leg to the upside. That is also natural support resistance line, guys. Take a look. Support, also minor support, breakout, resistance. Now it's also will be another resistance. And also, guys, this will be the fib level, 1125. Also, recall 1130 is the lower border. So here we see the crossing of this really very strong resistance cluster. But this level is important not only because there's multiple resistances stand in this area, but also, guys, because of this consolidation. When the consolidation is broken, usually market protects returning back inside of this consolidation. It's trying to prevent price return back in the consolidation. And if this will happen, this will usually leads to the action at least to the opposite border of this consolidation. In other words, this level will have the special meaning for us on the shed of the light of this possible returning back inside. So this will be not just resistance, but this also will be the previous consolidation. As soon as market will return back inside of it, that will confirm that this breakout was a failure breakout. Market to confirm the reality of this breakout, market needs to retest this line around 1130, maybe slightly higher, but it should not return back inside of this area and stop here. Maybe market will show some shadow spikes here on the non-farm payrolls release. I don't know at what session market will reach this area, but I know the major point is that we do not want to see it return back inside of this consolidation. If this will happen, don't be long, but don't be short. Do not take the short position because it could reach, could lead market to very significant downward action. That's very important, and probably the resolving of this riddle we will get on the current peak. Now, on the hourly chart, guys, we see the smaller development. So you can see this, in fact, this part. Okay. Could you treat it as the head and shoulders? Well, it's very probably difficult to do this. Very skewed shape. Small harmonic here. Probably I will not do this to treat it as the head and shoulders, but this mostly will not change the core. The core is the same. As you can see right now, market forms the potential butterfly cell. Take a look that it should lead to a reversal pattern, to the reversal market right around the same area. 1121 is the completion point of the butterfly. Okay. The target of the ABCD pattern stands slightly higher, 1154. We probably could accept the reaching of this target, but if market immediately then will return back down. So we probably will not treat it as the returning back inside of this consolidation. The market will just complete the target here somewhere around 1150, right, and then drop lower, drop back out from this consolidation. In this case, we probably could say that this was just a target completing and market turns down again. So as you can see, different patterns and tools of analysis point at the same area, 1130 range. That will be our major range to watch for in the current week, because around this range stands to answer on the question what we should do in the euro currency in a medium-term perspective, whether we should trying to take the short position, or we probably will abandon the bearish scenario and we should ready for taking the long if market return back inside of 1112 area, return back inside of this consolidation. You could trade this setup very differently. For example, scalp traders here could try the butterfly first on the way up. Okay, as soon as this will be very strong resistance, here as scalp traders also, if you trade on the intraday charts, you could try to take the short position around 1120, 1130 area with the stops above the completion point of this ABCD pattern, because probably it needless to explain, because market could hit this area, guys, but it still could hold the validity of the bearish scenario. That's why your stop should be placed above this completion point of this ABCD pattern. If even we will be wrong and market later will finally break this area and move up, at the first touch we will see probably a reasonable bounce here, and this will let you to place the stop to the break even and lose nothing if later market will continue move higher. That's why, guys, I talk about it every time, that we usually trying to use very strong levels for taking the positions in any direction. So this will be either support or resistance, because it has very good technical advantage that if even we will be wrong, the strength of the level will let us to move stop to the break even when the market will start to show the technical bounce at the first touch of this level. That's very good and very important advantage when you are trading such setups. So that's our current view on the market. First of all, wait for the reaching of the 1130 area and completion of these patterns, and later, as soon as market will reach it, we should understand what to expect next. It will depend on how market will behave around this area and whether it will break to the upside or not.